EV sales are experiencing a decline due to a combination of factors. Challenges such as range anxiety, insufficient charging infrastructure, and longer selling times compared to traditional gas vehicles have contributed to consumer hesitancy. Economic uncertainties, including high costs and interest rates, also play a role in dampening demand for EVs. Moreover, the oversupply of new EVs, driven partly by aggressive price cuts from manufacturers like Tesla, has led to inventory surges and intensified competition. Changes in government policies, such as tightening eligibility conditions for tax credits, further impact EV sales dynamics. Despite these setbacks, the EV market continues to evolve, with efforts ongoing to address these challenges and stimulate demand. Why Hertz's bet on Tesla isn't paying off in the US? Hertz made waves by striking a deal with Tesla to purchase 100,000 Model 3s, valued at roughly $4.2 billion, aimed at revitalizing its position in the car rental industry. This move, intended to distinguish Hertz amidst a landscape often plagued by commoditization, initially sparked positive reactions in both Tesla and Hertz stock prices. However, the reality of executing its EV strategy has presented formidable challenges for the rental giant. Hertz, post-bankruptcy in 2021, sought to redefine its image and strategy, with the Tesla purchase forming a central component of its recovery plan. Despite the attention garnered by its ambitious EV initiative, Hertz has encountered hurdles such as pricing complexities, steep repair costs, and declining resale values. This has left investors divided on the future of the program, with opinions ranging from continued perseverance to outright abandonment. The hefty investment in Tesla vehicles alone, estimated at around $2.5 billion, underscores the scale of Hertz's commitment to electric mobility. Yet this figure does not encompass additional expenses related to infrastructure and executing the EV strategy. While Hertz aimed to position itself as a pioneer in the EV rental market, the implementation has proven less seamless than anticipated. Part of Hertz's rationale for embracing EVs was to tap into the growing demand for sustainable transportation solutions, catering to corporate clients with ESG goals and enticing hesitant consumers into the electric vehicle fold. However, challenges emerged, particularly in the rideshare segment, where lower rental rates, increased accident rates, and prolonged repair times for EVs pose significant obstacles. To navigate these challenges, Hertz is contemplating reducing its reliance on Teslas in favor of vehicles from traditional automakers with more robust parts and service networks. Despite these setbacks, Hertz's overall performance remains robust, with gasoline vehicle rentals driving over 85% of fleet profitability in Q3 2023. In the face of these hurdles, Hertz is determined to leverage its investments in infrastructure to maintain a competitive edge in the evolving realm of electric car rentals. However, the path forward remains uncertain, with the company and its investors weighing the risks and rewards of its ambitious foray into electric mobility. Why EVs are piling up at dealerships in the US? According to Wedbush, the projected spending on commercial electric vehicles, EVs, is anticipated to surpass $1.2 trillion by 2030. Global consumer spending on electric cars reached nearly $400 billion in 2022, with the U.S. planning to add 1 million new EVs to its roads in 2023. Automotive companies have committed a total of $616 billion in investments from 2023 to 2027. Despite these promising figures, there has been a recent slowdown in EV sales attributed to various challenges such as range anxiety, inadequate public charging infrastructure, and longer selling times compared to traditional gas vehicles. Jeff Iosa, a Mercedes-Benz dealer, highlights an oversupply of EVs in the market, surpassing current demand levels. Consumers express hesitancy due to concerns about EV battery range and the lack of sufficient charging infrastructure. There's a perception that the automotive industry is moving too swiftly, with a disparity between government encouragement for electrification and consumer decisions involving significant financial commitments. Data from Cox Automotive indicates a notable increase in the time it takes for EVs to sell, suggesting a prolonged period on dealership lots compared to internal combustion engine ICE vehicles. Enthusiasm for EVs appears to have waned, with a decrease from 86% of U.S. buyers considering an EV in 2021 to 67% in 2023. Even established brands like Ford have faced hurdles, as seen with the F-150 Lightning experiencing a slowdown in sales, necessitating increased production of its hybrid F-150. Luxury EV brand Lucid has also encountered weaker than expected demand. Several economic challenges, including higher interest rates, inflation, and disrupted supply chains, contribute to the softer EV market. Moreover, EVs tend to carry higher price tags than traditional vehicles, impacting consumer adoption, with average transaction prices ranging from $53,000 to nearly $60,000. The profile of EV buyers is evolving, with around 40% trading in their existing vehicles for new EVs, suggesting a shift from early tech-savvy and luxury-focused adopters to a more mainstream audience. However, concerns persist regarding the resale value of EVs compared to ICE equivalents, given rapid technological advancements and uncertainties surrounding battery durability. Buyer remorse is evolving as EV prices decrease, with original equipment manufacturers, OEMs, adopting the Tesla charging standard to mitigate obsolescence concerns. Charging infrastructure remains a concern for consumers, while government regulations on vehicle choices generate mixed feedback. Despite challenges, there remains optimism for EVs, as consumers demonstrate a willingness to accept longer charging times and reduced range compared to traditional vehicles. However, the auto industry must address pricing issues and align EV supply with consumer preferences to ensure sustained market growth. Why used EV prices are falling? The slowing demand for electric vehicles, EVs, is underscored by the declining resale values of used EVs, leading to debates about the state of the broader EV market. Some view this decline as indicative of a temporary dip, while others perceive it as a more substantial slowdown. Several studies have highlighted a significant drop in used EV prices, with a decline of around 30% in September and October 2023 compared to the same period in 2022. Factors such as high costs, limitations, and economic challenges hinder the mainstream adoption of EVs. One perspective attributes the decline in used EV prices to Tesla's aggressive price cuts in 2023, sparking a price war and diverting potential buyers toward new Tesla models. This, in turn, prompted other manufacturers to lower their prices. Moreover, the influx of 2020 Model Ys into the used market, along with increased EV production in 2018 to 2019, has contributed to inventory surges. Despite concerns about waning EV demand, statistics indicate significant growth in both new and used EV sales, surpassing combustion engine sales. The impact of federal tax credits on EV prices is also considered, particularly regarding tightening eligibility conditions for the $7,500 tax credit on new EVs in 2023. The transition from a tax credit to a point-of-sale rebate in 2024 is expected to stimulate both new and used EV markets. Skeptics highlight challenges such as the oversupply of new EVs, economic uncertainties, and high interest rates, emphasizing the need for used EV markets to resemble their combustion engine counterparts. To gain widespread acceptance, EVs must match combustion engines in cost, range, and refueling speed. Additionally, external factors such as gas prices play a role in influencing EV demand. Conclusion. In conclusion, falling EV sales can be attributed to a variety of factors, including range anxiety, inadequate charging infrastructure, longer selling times compared to traditional vehicles, economic uncertainties, oversupply of new EVs, and changes in government policies. These challenges highlight the complexities involved in transitioning to electric mobility and underscore the need for concerted efforts to address barriers to adoption and stimulate demand in the EV market. Thanks for watching. Subscribe to the channel and hit the bell icon.